Will there still be a major airline that could go bankrupt? Many experts are saying that none of them will, but I'm still not yet sold on that notion. What the hell is going on with the airlines? Delta Airlines is up over 60% from just over a week ago. Southwest over 35%. Spirit is up over 110%, and American Airlines brings in the lead at over 120% as of this recording. Why are they all of a sudden moving? Have you missed your own flight on these? And which ones are still worth buying? I have 3 of those that you may want to consider. Find out all that and more coming up. What's going on, everybody? Welcome to Own the Chaos. The stock market is crazy, it's chaotic, and I've made it my mission to help you own it, make some money, and make a positive impact on your life. So what the hell is going on with the airline stocks over the last few days? As much as I would like to tell you that it's because the economy is in great shape, small businesses are flourishing, and unemployment is at record lows, I can't. The biggest reason for the stock market, and yes, the airliners are running, is based off of hope and expectations. The market always turns before the economy does and before unemployment bottoms. We've seen this time and again, and I've spoken to this many times on this channel, as many of you have kind of refused to believe that this could and would happen. It's just how the stock market works. It never actually follows the economy. It tries to work ahead of the economy. That being said, the airliner stocks have gone absolutely bonkers over the last couple of days, especially today, for several reasons. The Labor Department's jobs report shocked investors this morning, showing that the economy had added 2.5 million jobs last month when consensus forecasts had called for another 8 million payrolls to be lost. Unemployment rates rose 13.3%, which is well below what the expected 19.5% was. Guys, how do these analysts get this thing wrong all the time? I swear it's them and the weathermen that can always be wrong yet still get paid stupid money for their jobs. If you guys agree with me, go ahead and give me a thumbs up down below. I certainly would appreciate it, and as we all know, it helps the YouTube algorithm, or so I'm told. Anyways, American Airlines stated on Thursday it was scheduled to fly more than 55% of its July 2019 domestic capacity for July this year, which is up from just 20% in May, stating it was a result of an improving demand for air travel. The announcement sparked a 41% surge in American Airlines stock on Thursday, and that's what started this insane rally among all other airlines. As of this recording, American Airlines is up yet another 20% today alone. The demand is coming from news of businesses finally opening back up to at least some capacity. Here in my state of Maryland, we are entering into phase 2 of the reopen today, as well as many other states around the country. MGM Resorts, along with many other casinos, are opening up in Vegas, and Disney plans to open back up in July, which means that people will be itching to get back on track with their vacations and leisure activities. So is now the time to remain bullish on these stocks? Are airliners really coming back on this demand alone? You know, now is when I would normally quote Warren Buffett and say something about being fearful when people are greedy, but considering Buffett didn't take his own advice on this and royally messed up on this front, maybe I won't say to follow his advice, but this is definitely a time where I would say not to chase this rally. Have you missed your opportunity to get in at all-time lows? I think that's probably true. Will there still be a major airline that could go bankrupt? Many experts are saying that none of them will, but I'm still not yet sold on that notion, and one of the biggest reasons why is because a simple statistic called the break-even load factor. The break-even load factor on airlines, put simply, is the amount of passengers it would take for a flight to just break even. Dave Angotti, an airline transport pilot and data statistician, collaborated with the Florida Panhandle about airline profitability statistics in the U.S. Of the 4 largest airliners, Southwest has the break-even load factor at 72.5%, with Delta and United just behind them at 74 and 75% respectively. And now look at American Airlines, needing to reach nearly 80% capacity on every flight just to break even. That's an insane statistic to me and paints a real picture of just how poorly the industry is doing. I swear, I'm not trying to be Debbie Downer here, but guys, these are just the facts and a dose of reality. Now, yes, the demand for flights are coming back, but they are still losing a considerable amount of money on each flight. Right now, they're anywhere between 40 and 50% capacity, and that's on a good flight. Every empty seat on a flight is a direct hit to the airline's profitability, and the most profitable airlines in the United States, which is Southwest, needs to sell 73 out of every 100 seats just to break even. The expense to maintain aircraft staff, ground, and flight crew, fuel the aircraft, and many other costs associated with operating the airline is astronomical. Literally, no airline could survive for a length of time with low passenger counts we continue to see. In my opinion, flight reductions and staff reductions is inevitable and will likely happen sooner rather than later. Airliners that took stimulus money are obligated to keep employees on payroll, though, through September, and I would be shocked if we didn't see a huge layoff in the industry then. Either that or travelers like you and me are going to be paying a ridiculous amount of money for a flight. Let me know in the comments which scenario may play out there, because I'm still on the fence about this and not leaning one way or the other, so maybe it's both, but let me know down below. Anyways, looking at American Airlines, if you take the nearly 80% break-even number, along with nearly $50 million in cash that they're burning every single day, which is also the worst among the big four, might I add, this could spell disaster for the company. The only way that I see American Airlines to continue to kick this can down the road is through an offering of some sort, and it's going to be a big one. And given where the price has gone in the last few days, management has got to be thinking about this option. I would not want to be in American Airlines when that happens, guys. It's got to catch up to the company at some point. That being said, I think this goes without saying at this point, after laying this all out for you, I think that you will have opportunities to grab some cheap shares of the airliners in the future. And as promised, I do have 3 airliners that I think that are worth grabbing when the inevitable dip occurs. Now, if you're looking to hold on to these airliners for a very long time, dollar cost averaging is probably the best way to go for you, in my opinion, but nevertheless, here we go. First one is Delta. Ticker symbol DAL is currently priced at $36.34 as of this recording. And why do I like them? The confidence the CEO has in the company moving forward is definitely encouraging. He stated they have plenty of cash to get them through the first quarter of 2021, and that was a month ago. They aren't burning anywhere near the cash that American Airlines is because they have an appropriate amount of planes in their fleet to keep up with demand, and they don't have planes sitting around burning nearly as much cash. They're the largest airliner by market cap, and when put in situations as we are in now, I think going with the company that has the best possibility to reach back to profitability is the most logical one to go with. On May 26th, Delta had a 50% retracement from its lows down to around $27. If we see a pullback to that area, it would be an aggressive buy signal, in my opinion. And I can easily see that happening at some point. The next one I'm going to go with is ticker symbol LUV, which is currently priced at $40.12 a share as of this recording. That's absolutely astounding. Southwest has always been on my list as far as airliners go. They are just so well run, and the only reason they sit below Delta on my list is because they only serve domestic flights as opposed to Delta, which is international. The advantage of being able to offer international flights, I think, goes without saying here. That being said, when you consider the break-even factor is the lowest on Southwest, they have the best looking balance sheet and the least amount of debt to deal with. I still think that this is a clear buy. However, I think that this reaction is still a bit too far for even them, and I could see this pull back to around $35 a share before this may continue its ascent. Now, before I get to this last one, I just want to invite you over to the Chaos Crew real quick. If you like seeing these types of videos about what I'm watching, click the join button next to subscribe, and what you will get is a watch list for me every day before the market opens, which gives you a snapshot of what the market's doing and how to plan your day. For $4.99 a month, I think it's an incredible value, and if you do as well, I'd be happy to see you there. Finally, the last of my top 3 right here is a ticker symbol SAV, which is Spirit Airlines. It's currently priced at $25 a share, which I said was going to hit that last week, if you might recall. Now, I know those of you who follow this channel regularly are probably asking about where JetBlue went, and don't get me wrong, I still like JetBlue a lot, and if you're in it, I still think it's a good idea. Now, you couldn't pay me to get on a Spirit flight. Spirit Airlines has cheap fares because they cut out any and all extras and charge you a la carte if you want to take on bags, want an in-flight snack, or soda. Literally nothing is included other than the flight itself. But if you're one of the many Americans whose job has been slashed, or your pay has been significantly cut but need to travel still, Spirit may be your only viable option. I think this makes the stock a little bit more attractive at this point, and the market seems to agree. Now, out of the 3 that I mentioned, I don't think this sees as much of a pullback, so dollar cost averaging might be your best option here. But let me know what you think about these in the industry as a whole. Is this an overreaction or a reaction that's long overdue? Let me know, and in the meantime, check out this video here, which was the first ever stock market showdown comparing Tesla and its new contender, Nikola Motors. Or if you want to catch my top 5 stocks that's currently sitting under $10, check check out this video here. And as always, folks, I will see you all before the bell, and B Smith is out.